All right. Well, hello everybody. At least if you're seeing this video, that means I at least making this private on YouTube so I can send it out to a few people. It's really kind of just my views on the market recently. I'm not saying what I think is going to happen, but what potentially could happen. Really, what we're going to be looking at is this relative analysis. We're looking at ratios specifically. What that is that you actually take, for example, you see in the upper left, take a security and divide it by another security. For example, SPX divided by the AGG. The way that this works is that when you see the uptrend, or if you see a green candle, or really any uptrend in one direction, that means the S&P 500 is outperforming the AGG, and vice versa. This is a really good gauge because this is kind of how I start off my analysis, by looking on if things are in a risk on or risk off scenario. We can see for a number of years, again, going back to 2008 is another anomaly, and looking at 2020 is another anomaly as well. But the S&P has outperformed bonds relative. What I'm starting to personally see right away currently in the market is divergence. This two up top is an indicator of momentum. It's called the RSI, Relative Strength Index, but really it's used to identify when things are overbought or oversold. Generally, when we're above this 70 line, that means something is overbought. But when we're below this 30 line, that means something is oversold. Doesn't always play out. But what we notice all the time, or what I like to look at, is these things called divergences, where price will make a certain direction while the indicator will make something different. For example, here, if you're looking where my pointer finger is at, we made a high. We made a high on RSI. We made a new high. We made a lower high on RSI, showcasing that not as many buyers were present for this move. What I'm starting to currently see on a lower time frame, so on a weekly time frame here, so we're actually getting some of the similar divergence here, where we've had this really, really strong push up. We've actually got to the same level, but we're losing momentum. Again, we're starting to see markets pull back, which we'll kind of touch on here shortly. But you're actually starting to see, you're starting to see markets pull back, and there could be a potential for this to break lower. I don't think this is a total reset into bonds, but again, there may be a little risk off scenario where it might not be so advantageous to put dollars into equities. Vice versa, one that I'm really watching heavily is the commodities GSG compared to the S&P 500. In this case, when this chart is going up, that means commodities are outperforming the S&P 500. Historically speaking, this has been a trend for years where the commodities market has underperformed the S&P 500. What we're starting to see, and you could even just do by drawing simple trend lines here, is that we're starting to get some larger term or longer term trend breaks. You don't have to like it or not, but it seems like usually these trends are decade-long trends. Personally, this has worked out in 2022 really well when there was some capital flows into commodities. And now we're starting to see, again, after this reset, as I would call, through 2023, starting to see capital flow into commodities again. See, look again, that was compared to the S&P 500. This is now compared to the NASDAQ. Again, a lot of very similar charts that we're going to be going over. One that I really do want to touch on pretty heavily is this gold versus S&P 500. The way we look at this chart is if this chart is going up, that means gold is outperforming the S&P 500. We're going to look at this on very, very long-term time frame. I actually might drop it down to like a 6-month time frame, because this chart goes back months. Looking back all the way down to basically, the 1900s, early 1900s. And you can see there's been some cycles within the markets where, again, gold has outperformed the market or equity market and vice versa. What I want you to notice, though, is this little area right here. You can call it a number. I just call it this relative ratio area, where we've actually based out multiple times of how to move up. Here's a little bit of an anomaly, again, in my opinion, because of the dot-com bubble. Again, capital is really flowing heavily in there. Again, we're seeing some similar pattern where this, in my opinion, probably better to go to a monthly chart. there's a higher probability, there's some sort of a high probability that we've touched into the zone and we're starting to actually get close to breaking this trend. Again, if we're actually starting to look at gold specifically as well too, individually, we've had a very, very large form base over multiple years and even had multiple touches. Usually the fourth touch is going to break through. We've had some multiple trends within it where we've gone down and gone up, but we're starting to form some sort of, I guess, divergence, whether that be on the RSI and even on the MACD here. We even had a little bit of a pump up. I kind of want to take this always back to the dollar. The dollar is really everything that moves. When the dollar is going up, relative, again, everybody, have to think that we're looking at everything in some sort of a ratio there. That everything technically, if you're looking at Apple, it's all denominated within the dollar. So when your dollar is getting stronger, that means, again, equities and a lot of other, I guess, parts of the market as well too are potentially going down because everything is denominated in the dollar. We've seen some pretty strong capital flow into the dollar since July. Again, this could be also attributed to the 2022. Had a very, very strong capital flow into the dollar. In my opinion, this looks like this could possibly be resetting. I'm not saying we're going back all the way up here, but there could possibly be some sort of scenario where capital flows into the dollar. And again, commodities performed very, very well during that period of time. Just kind of switch this over again. The gold versus the gold versus QQQ doesn't look as good, but again, it's getting to these levels again that have historically bounced. Again, it's kind of early 2000s, not as much data, but again, I'm watching it very, very heavily. One thing I do want you guys to take a look at, and this is specifically the energy chart, and we'll do a little bit of a live drawing on this. The energy chart, in my opinion, has looked to be one of the strongest charts in Continuum for the last basically since 2021. Continued to make high lows, higher lows, higher lows, and actually starting to get to some historical points. Even flipping over to crude oil currently as well too, where we're seeing crude oil. Oh wow, see, that's what happens when you use a logarithmic chart. Actually seeing crude oil come back and base out and starting to pop out again. This is a tool I called the anchor. I use called the anchored VWAP. This is a totally different video that doesn't need to be covered today. But again, large basing pattern. We popped up. Now we're coming back down. Now we're starting to see oil prices come back up. One thing that I really like to see is that although we also have this pop down or this drop down within the energy or within crude oil, the energy sector actually held very strong. Interesting enough, the energy sector is considered a value play as well too, under relative value or valuations. You could argue going down to shorter timeframes here, and this is again a play that I've been net long on personally. That we've had some very, very strong breakouts and are continuing up into our primary trend of higher highs and higher lows here. So again, watching energy. When we look at energy though, we can compare it to a lot of things. One I like to compare it to a lot is international markets or even specifically the emerging markets. Don't get me wrong, you can make money in both of these markets, but would you rather be invested in the trendy market or the market that is de-trendy compared? Sorry, do XLE versus the EM. Here, this is the energy market compared to the emerging market. In the last period of time, or at least in this trend, would you have rather owned the energy market or would you rather have owned emerging markets? I like bring this down to the weekly because you're actually starting to see even, yes, we've had a pullback, but a very similar chart pattern. We're starting to see some breakouts and a lot of things reset. Again, XLE. How about the XLE versus the Russell 2000 growth, which I think was considered more so on the small cap or mid cap side. But besides the point, again, you're starting to see a lot of these trends that haven't been broken in years. Again, you can argue that there are some underlying trends here that, hey, if this gets broken, this would be very, very interesting to the upside. But again, you're starting to see a lot of decade-long trends that haven't been fought with for years. One that I'm watching as well is uranium. Looking specifically, again, this is a messy chart. but uranium as a whole has been making higher highs and higher lows. I do personally think that uranium will have a very, very strong future. It seems that we're starting to continue to try to push for some sort of renewable energy, but there's been so much hate within the uranium space for so many years with it being unsafe, Chernobyl, that when capital flows to the space, I think it'll be catastrophic in a good way, as in money will flow very quickly and it'll be a very, very quick and explosive move to the upside. Again, we're already seeing some highs being broken. We're holding old highs. This is specifically the ETF. I'm personally invested into CCJ. This looks a lot better in my opinion. You're starting to see, again, decade-long trends, or not really decade at this point, but multi-year trend lines being broken and higher highs continuing. You can even look specifically at CCJ, for example, versus, let's do gold. Even relatively speaking, oops, not CCL, that is the cruise liner. But CCJ versus gold. You're actually starting to see this outperform gold. We do CCJ versus the S&P 500. This is starting to look like it's outperforming the S&P 500. Could probably flip through multiple charts and actually draw the same conclusion to both. One thing I want to flip back to real quick, again, this is a hot topic, is interest rates. And I always want to bring it back to interest rates all the time is because everyone thinks interest rates are going back down. There may be pullbacks within the market, but people have to understand, back in the day, 1920s, 1930s, before this Keynesian economics where we were pumping money into the system, people used to celebrate higher interest rates because it showcased there was a demand for money. Look at here, at least from the data from what I'm able to track, 1987, we've been in this detrending basically environment for interest rates. 2022, 2023 totally shifted this. Again, I do think there will be some sort of pullback, but I don't think there's anywhere chance for going lower. But people need to get that out of their head that interest rates are going to go back down. Yeah, potentially, but they're not going back down to, 1, maybe even 2%. I think there's a possibility that could go back to maybe, 3.5. But it still looks like, again, with charts, we're looking for higher highs, higher lows, higher highs, higher lows. We're starting to make that. You can see this on the 10-year. Again, don't have to reiterate it over and over again, but multi-year, decade-long trend lines are being broken, and people just can't get it out of their head that interest rates are continuing to go up. Even look at the 2 year. 2 years not as fascinating to look at. Again, call this the magnet zone. Again, prices coming back and testing it. Potential for it to move, which would be crazy, up into the 6 and 7% range if we get above here. What's stopping us from going there? Kind of a little quick chart overview. Another one that I am possibly looking at, I always look at the futures market. I do like the futures market a lot more. Look out there, NASDAQ here specifically, and get it down to a weekly chart, maybe possibly a daily. Starting to see some rollover within the charts here. One thing I do want to point out is that there's a gap in the NASDAQ futures chart. Historically, I've never, ever really seen gaps within this chart. If there are gaps, they get filled pretty quickly. We're starting to see possibly risk come on. The dollars continue to rise. Could be a pretty good chance that we go down and fill this gap here. Again, this is very similar to what the ES looks like as well. Thank you for tuning in today, guys. Again, this wasn't a super long video, but again, this is trying to keep you guys informed using charts and understanding that I think charts are very, very helpful for many people and can be used alongside fundamental for people's investing. Have a good rest of your night, guys. See ya.